Namaskaram. So we are about to start one of the another most important chapter, taxation of trust. Usually our income tax is focusing more on taxation of profit making entities. Usually trust is a non-profit making organization and we are not going to tax particular trust. The focus of this chapter is not to tax. The focus of this chapter is to provide exemption. But as you are aware, all the trusts are not doing a work according to their object. If you have seen movie Shivaji the Boss, in that movie they have shown a little part where the black money of India is transferred to outside India by using Hawala market. Okay. And from outside India, it is brought back to India as a donation to an educational trust. Trust means charitable trust. Why they created trust? Why not a company? Because the trust is exempted from income tax law under section 11, 12 and 13. We are going to learn a very specific provisions which are applicable to trust, and because you, me, income tax department, everybody knows that in trust, because it is exempted from income tax law, it is very high possibility that it can be created for a manipulative purpose or illegitimate purpose. And therefore, this exemption is not an unconditional exemption. This exemption is a purely conditional exemption. The chapter is focusing more on those conditions. So when I talk about taxation of trust, actually I am not teaching you taxation, actually I am teaching you exemption. And exemption is provided in section 11. When we say exemption is provided under section 11 and section 12, because about some voluntary contribution reference is made in section 12. But you should understand the core section that we are going to learn is section 11, exemption to the charitable trust. Okay. Conditions are given in section 12A, and one of the conditions says that trust should be registered trust. There are a lot of conditions given in section 12A. One of the conditions says a trust should be registered under section 12AA, and that registration procedure has amended by the Finance Act 2020, and they have brought new section in income tax law which is section 12AB, which is not applicable for current examination because the applicability of this section is deferred by government itself as on 1/4/2021. And because it is deferred to 1/4/2021, it's not going to applicable for current assessment year exams. Therefore, for AY 21-22, this 12AB is not applicable. This is the new law of registration, a beautiful law of registration where the trust will have to register themselves immediately now. Again, even though you are registered 20 years back, 12 years back, 5 years back, 2 years back, still you have to take a new registration under section 12AB. And for every 5 years, after every 5 years, you have to apply for a registration. Because when you apply for a registration, income tax department will check whether you are doing a genuine job or not. Okay. Apart from that, you need to understand the registration is up. So this section is not applicable. Ignore about 12AB and related provisions. Focus more on 12AA, existing provision. We make application to CIT. Okay. In Mumbai, we call them charity commissioner. Actually, their name in Mumbai is called charity commissioner. They are actually income tax commissioner, but we call them charity commissioner. And in Waradi, there is a place called Waradi in Mumbai, where all the Maharashtra's this major charitable trust work is done in that income tax department. The department itself is separate building. Okay. So we say them charity commissioner. And when I say charity commissioner, you need to understand all the matters of trust are not handled by ITO, they are not handled by ACDC, they are not handled by JC, even though additional commissioner, the matters are directly handled by CIT. And whenever matters are handled by CIT, and whenever if something goes wrong, and if some matter begins, and if trust wanted to claim an appeal, the appeal will directly go to ITAT level, not to CIT appeal. Okay, not to CIT appeal, because the order is passed by the similar position authority, that is CIT, and any order passed by the CIT cannot be challenged to CIT appeal. It has to be challenged by ITAT, challenged in front of ITAT. So this is one of the points that you should understand. Section 13 says there are certain situations, circumstances where we will not give you exemption. No exemption, because you are not complying with the law, you are not operating within the objective of the law. So these are the section, important section 11, 12, 12A, 12AA, section 13. Okay. Apart from that, in bonus, we are going to learn section 1023C, section 1023C in this particular chapter, section 1013A, political party, section 1013B, electoral trust. So these are small chapters that also we are going to complete in this chapter itself. Though the name of chapter is assessment of the trust, but assessment of other small entities which are also kind of charitable in nature, whose objective is not to make profit, their objective is to serve the society, and therefore we are providing them exemption. At the same time, all the exemptions are conditional in nature. They have to comply with the condition, then only they can enjoy the exemption. Now, so far as the trust is concerned, the major time or energy which we are going to spend to understand few important aspects. One of the few important aspect is the business income of the charitable trust. Sir, can charitable trust have a business income? Yes, a charitable trust can sell the t-shirts and earn the business income. A charitable trust can sell the food or water bottle and can earn the income. So yes, a business income can be there. It's a treatment, conditions, all that thing we are going to learn. Apart from that, a charitable trust major source of income is voluntary contribution. Voluntary contribution. So we are going to discuss about voluntary contribution. Usually when we talk about voluntary contribution, we assume that name of the donor is on record. Okay, name of the donor is on record, sir. And if the name of the donor is not on record, please understand that particular donation is called as anonymous donation. Anonymous donation means that donation, the donor's name is not available on the record, or it is hidden by the trust itself. So trust knows the person, but trust does not maintain any record in respect of that person. This is kind of little negative aspect, because we know that only a black money earners, they are donating money to temples and gurudwara and churches in crores of rupees. People who are ordinary donor, recognized donor, they don't mind sharing their name, because they know that from their income is accounted income, it's not an accounted income. So we are going to learn a special provision about anonymous donation. The fourth aspect of this particular charitable trust calculation that is little complicated to understand in the first round is capital gain. Because you people have learned capital gain thoroughly, so you will try to apply the provisions of capital gain in this chapter. But let me tell you, the capital gain computation and exemption mechanism of this chapter is completely different than what you have learned in capital gain chapter. So trust have its own provisions of capital gain computation, and that is given in section 11(1)(a). So what I am trying to tell you, please understand, these are the four special income of the trust that we are going to learn. An anonymous donation is a taxable under section 115 BBC, but some exemption is also provided to that particular anonymous donation. It's not that every anonymous donation has to be black, or every anonymous donation, like if in case of every anonymous donation, trust has to be punished. Usually they are punished at the rate of 30% taxability, but balance time or in ordinary cases or in genuine cases, it's okay, it's fine. Usually trust is established by the founders. They have very different name: founders, authors, contributors, donors. Okay, these people usually they found a trust, and it has been seen, and it is in experience of income tax department. Usually these people are jewelers or business class or real estate developers or movie makers. Are you getting? Or politicians. So these people are not having good image in income tax, and therefore though we are talking about a taxability or giving exemption here, the law is created in a such a way to avoid tax evasion. Please understand. Therefore many conditions are imposed under income tax law. There was a time when trust taxation was very complicated. Over the period of time, the taxation law for trust has become now neutralized. Now lot of confusions are taken away, and now still we are left with some points. I should not say 100% clarity is there in the law. There are certain gray areas where the clarity is not there, and there we have to play with our assumption, or whatever ICAI does, we have to follow that particular mechanism, that okay, our institute is following this mechanism, we will also follow the same mechanism. That is for academic purpose. By the time you become a professional, a new mechanism is coming. Maybe in new law, in improvised law, they are going to take care of more provisions about trust taxation. So they have already started repairing the provision, because government also knows how important trust taxation is for the country. We don't have trust which are ordinary trust. There are trust, there are religious places in India which are having income in crores and thousands of crores sometime. In fact, the richest organizations, or if you just Google out 10 richest charitable trusts and 10 richest charitable temples or religious places, you will find a list how much huge wealth they are holding. Obviously, it cannot go unaccounted or without income tax scrutiny, and therefore filing of return for the trust is mandatory if their income exceeds basic exemption limit without giving effect of section 11, 12 and 13. And whenever income exceeds basic exemption limit without giving effect of section 11 and 12, they have to get it audited. That means audit is mandatory for the charitable trust. By putting all these points in your mind, let us start with the definition of charitable purpose, because the game starts with the charitable purpose definition itself. You cannot include anything in the definition if it is not expressly written. So please understand the definition, though it is written in an inclusive manner, we have to consider it in an exhaustive manner. So you can open a charitable trust which is there for a purpose of relief of poor. It can be an educational institution. Yoga was not initially there, but then Ramdev Baba wanted to have a benefit for the yoga, and he is having kind of good connection with the current government. So he has made, or he on his request, they have amended the definition of charitable purpose, and they included yoga now into it. So Ramdev Baba or his organization, or like his many organizations are there in India, those will be exempt if they are doing a business of yoga. Let me tell you very clearly, teaching yoga is a business, but the business of yoga is now a charitable purpose. Medical relief, see, relief of poor, education, medical relief, you don't have to read, because by looking at itself, you can tell me that yes sir, it is a charitable purpose. Now, preservation of environment including watershed, forest and wildlife. There are various organizations who are saving the wildlife, they are saving the monuments. So they also wanted to have exemption under this section. So we have provided them the relevant exemption. Preservation of monuments or places or object of artistic or historical interest. So Taj Mahal, you know, Qutub Minar, you know. In Karnataka, we are having Hampi. In Maharashtra, we are having a lot of Shivaji Maharaj, created forts which are there. So preserving monuments is also one of the charitable object. I don't find any difficulty in reading clause A, clause B, clause C, clause D, clause E and clause F. The clause G is advancement of any other object for general public utility. Because of this, the definition is inclusive in manner. So we don't know exactly what is there in advancement of any other general public utility, and this has an open-ended discussion, and therefore as I told you, this is the black and white area. We know clarity what is charitable and what is not, but this is the gray area. Point number G is a gray area where anything can be covered, or I can bring many things under the provisions of advancement of general public utility. I am running a hotel where I am serving a food. I am charging money for that, appropriate money for that. Can I fall in this? Yes, I can argue this, that I am serving a food which is a basic necessity of the public, and therefore I am under advancement of general public utility. Right now I am providing you education, but I am not providing you education which is free in nature or charitable in nature. I am providing you education which is payable, but I'll say, see, I'm charging the money. That doesn't mean my intention is to earn money. My intention is not to earn money. I'm actually providing you education. So it should fall under the general public utility. I'll tell you about ICAI. When I'm talking about ICAI, you need to understand one thing very clearly, my dear friends. When I'm talking about ICAI is also a charitable organization, because they are saying they are making crores of rupees property, they are making crores of rupees money, they are purchasing crores of rupees properties. Our institute, whether it is CA Institute, CMA Institute, CS Institute, our institutes are making crores of rupees profit, and they are porting as if they are educational institution, they are there for advancement of general public utility, and their income should be exempt. So last area is always a disputable area, please understand, and therefore many amendments and clarification has happened on the last area. Provided to section 215 says, okay, if you are talking that you are a charitable organization, then you should not do the business. But then I said, no, some business is done by the many charitable organization, so I should also do the business. The advancement of any other general public utility shall not be charitable. So they are saying, okay, usually you are charitable, but if you are engaged in a business activity, business means profitable activity, profit making activity like other people are doing, it involves carrying on any activity in which in the nature of trade, commerce or business, then you are not charitable activity. For a fee or other consideration, obviously that means if you are providing free food, you are charitable, but if you are charging money, then you are not charitable, irrespective of use or application of the income of such activity. So whatever money generated by you will say, I am using it for charitable purpose, therefore I should be charitable. No. That purpose is not important here. You are not supposed to do the business, therefore you may not be charitable. Now please understand, Salman Khan is having one organization called Being Human. Okay, that organization sells t-shirts. Now when he says that I have the organization which is for advancement of general public utility, selling t-shirt is incidental to my charitable objective, and I have to conduct this particular business, government will allow it, but they are saying the total receipt from a business activity should not exceed 20% of total receipt in the year. So look at this. However, carrying on the commercial activity shall be still regarded as a charitable purpose if such commercial activity is undertaken in the course of actual carrying out advancement of other object of general public utility, and so it is carried out, the business is carried out for the purpose of charity only, and the aggregate received from such activities during the previous year do not exceed 20% of total receipt of the trust or institution undertaking of such activities. Please understand. So we have to check. So if my total receipt is 100 crore, and if my business receipt in that 100 crore is only 18 crore, valid. So if my business receipt in the 100 crore is 22 crore, then not valid. So not valid, then what they will do? Will they cut the hands of the founders and trustees? No. Will they punish them? Answer is no. They will not give the exemption. And when they don't give an exemption of section 11 or section 12, then what will happen? Your trust will become taxable. According to CBDT clarification, Income Tax Department is not even authorized to cancel their registration merely because they are doing business exceeding 20%. See, how much business they are going to do and they are not going to do, that depends on the annual turnover. So they are not doing anything wrong, they are just doing business. So you can cancel the exemption but not the registration. So let's talk about that clarification. Amendment made under section 215 will not apply in respect of the first 6 limbs. So it is not applicable for your yoga, your medical relief, your relief of poor, your education. It is or advancement of this, what you say, preservation of wildlife, preservation of monument. It is not applicable for those. It is applicable only for advancement of general public utility, a gray area. Okay. The amendment made in section 215 will not be applicable in the first 6 limbs. The relief of poor, education, yoga, medical relief, preservation of environment and preservation of monuments. Consequently, where the purpose of the trust or institution is the relief of poor, they can have a business receipt exceeding 20%. So they can have, there is no problem. Section 13.8. What is section 13? You should remember, section 13 is about no exemption. No, section 13 talks about no exemption. So one question should arise in your mind. So what if my business receipt exceeds 20% of total receipt? What if my business receipt exceeds 20% of total receipt? Nothing. Section 13 will come into a play and it will say you will not get exemption for that previous year. This is very important. It's not that permanently your business exemption will be withdrawn. Only for that previous year you will not get the exemption. Maybe you will learn the lesson in that year, and next year onwards you will not do the business exceeding 20% of your total receipt. 13.8 provides that if a trust has the object of advancement of any other object of general public utility and the trust has been granted a registration by the CIT, Commissioner of Income Tax, as a charitable trust under section 12AA registration section. The receipt from a commercial activity exceeds 20% of the total receipt, then exemption under section 11 and 12 shall not be available to such trust for the previous year in which receipt exceeds 20% of total receipt. The commissioner shall not cancel the registration of the trust only on the ground that commercial receipt exceeded 20% of the total receipt. There is one section in 143. This is scrutiny assessment. You will learn this section in assessment chapter. Just wanted to create a linkage here. Just because your income has exceeded 20%, okay, just because of that reason, under section 143.3, which deals with assessment, that has been amended, and that provides that AO shall not give an exemption under section 11 and 12 in case of trust or institution for the previous year in which proviso to section 215 becomes applicable. That means it is income exceeding 20%, even though approval for trust institution has not been cancelled under section 12AA. Now, why this particular proviso was added or explanation was added in 143.3? Because there is section 1023C. Okay, in 1023C, central government grants the exemption. Okay, and that section says, section 143.3 says, if assessing officer wanted to assess the income of this particular trust, he cannot withdraw the exemption because exemption is granted by the central government. So who can withdraw the exemption? Obviously the approving authority. So if central government have given you the exemption, central government is the authority who can withdraw the exemption, not the AO, and therefore this explanation says it's okay if exemption is not withdrawn, still you can do the assessment without giving the exemption. But that liberty is not available to AO under section 1023C as compared to 1112. In 1112 it is available. Please wait for assessment proceeding chapters to understand this clause very well. There we will discuss about this. Just wanted to create linkage between these two sections, because when you revise it after doing all the chapters, it should hit your mind. So this is basic introduction chapter. We are moving ahead with a very good amount of speed, and please remember this chapter is the most important chapter because of all the recent amendment which has been there, and we are going to learn this chapter through Q&A. Lot of provision I have not taken in the theory part, lot of provision I have taken in a Q&A format. So the objective is to complete maximum Q&As, at the same time teach you concept. So here while teaching you the concept, earlier I was thinking about creating imaginary illustration. Then I thought instead of creating imaginary illustration, let me teach you concept through question and answer, so that you will understand question and answer, at the same time my concept will over. And therefore don't understand that every question that I am going to read is a question for you. In fact, questions are represented in such a way that it will serve both the purpose. It will teach you the concept and our question and answer will also get over. Yeah, thank you.